I'm James Turk. I'm a director of the Gold Money Foundation, and I'm here with James McShirley, who is a regular contributor to Bill Murphy's LeMaitre-Cafe.com. James, there are a number of things I want to talk to you about. You know, I read your column every time you're posting something there, but I'd like to start out with the 1% and the 2% rule. Can you explain to the viewers a little bit what that's all about?
Well, yes, and I probably came from a different perspective, which was the lumber industry, so it maybe gave me a fresh look to look at this from an outside viewpoint. But way back in 1999, when I got onto LeMaitre and GATA, it was Bill Murphy who was always very irritated at this $6 collar. And the
price of gold would rise no more than $6 in any given day.
Correct.
Yeah.
And it would just, like a wounded duck, just fall right at $6. And it was really curious to me, as in being in the lumber and lumber hedging and lumber trading, how that happened. And I wanted to identify that. And what suddenly occurred to me, almost as an epiphany, was that it was a percentage they were utilizing, which was 2% of, at the time, roughly $300 gold. Mm-hmm. So to test that theory, I thought, well, then if gold does rise and it becomes $400, we should be seeing an $8 collar. Mm-hmm. And sure enough, it showed up. Gold would just stop at $8. And then later on, at $600 gold, it would stop at $12, or the 1% or 2% was its daily limit. So then I started discovering.
Just to confirm, it was a daily limit when people were coming in to stop the price from going any further, even if there was good demand or reasons why one would expect the gold price to continue rising.
Yeah, it was irrespective of fundamentals, technicals, physical demand, stories coming out of the news. It was irrespective of everything. It was when gold got to 1%, or rarely 2%, but when it got there, that was all that was allowed.
Just give up the ghost in terms of any price movement. And then you were saying you discovered after that?
And I discovered that there were other trading bands on other key indicators of inflation expectations. Mm-hmm. And I think even now that the Dow, although this week it violated that rule, and that's a red flag to me, but when the Dow would fall, they had a plunge protection enforced that it was roughly a 1% or a 2% plunge, that they would support equities.
This is the so-called Greenspan put?
Yeah, exactly. And I think the Greenspan put was, I guess, what the gold call. They wouldn't allow gold to rise more than 1% or 2% on a given day. And that was in the COMEX trading hour.
Yeah. And how long has that gone on?
I've identified it myself since about 2002. Although I suspect it was going on before, I just didn't know it.
Statistically, the odds of something like that happening are out of the realm of normal bell distribution probabilities.
I'm not a mathematician, however my wife is, but I know the deviations are substantial. Mm-hmm. There are many. And I know that statistically, like this year alone, I think 40% of all trading days stopped at 1%. Mm-hmm. It's so statistically off the chart that you can't really.
It's almost like there's a mathematical computer-generated algorithm that when the price hits a certain level, somebody starts coming in and selling the paper market in order to keep that price contained.
Yeah, I think you may actually have identified that. I think that's a correct sentiment, which is it's so sophisticated now with the algo trading that they may even be pre-programmed to program to hit a bid offer at a price point, and it's almost set up for the day. Mm-hmm.
So in your view, this is clear evidence, actual trading evidence of the gold price suppression scheme, which GATA has been publicizing and informing people about now for over 10 years.
Yes, I think it's very clear, and that was one of several derivative manipulations that I believe are in force, and there are others I believe that I will identify further I'm working on.
They'll be posted also on LeMaitre-Cafe.com?
Yes.
Okay, good. I look forward to seeing that.
Yes.
You just mentioned a couple minutes ago when we were chatting about a red flag. Can you explain what your thinking is there?
Well, my three basic derivative manipulations that I follow, it's my view that when they are violated and when what Bill refers to as the cabal,
or gold cartel
rules are violated, it's a red flag, and you should pay attention immediately because it may mean that they are indeed losing control. And for instance, when the Dow fell 500 points and was not supported, that was one of those red flags that went up that they made.
Maybe it was supported, but because there was so much selling, there wasn't enough support to offset that selling. Is that what you mean by losing control?
That's correct. And conversely, with gold, I believe that when that 2% rule is violated, we haven't seen really a 3% day in gold in 3 years, and we've only seen maybe 4 in the last decade, where gold exceeded 3% on any given day.
3% price rise from the previous day.
Correct.
Okay.
So when you do see that rule violated, and say if you see a day when gold is up 5%, that's my red flag that they may be losing control.
So was this a red flag that occurred in suggesting that maybe they are losing control in the gold market?
Well, no, because, well, in the Dow, but we still haven't violated
There are
any.
no red flags in gold, only
yet.
red flags in the Dow.
Because last week, for instance, and that's another manipulative pattern that I believe has been occurring, and if there is a day that it goes up 2% and it stops, the next day it's only allowed to go up 1% and it's capped, and then there's a steady trading period of anywhere from 2 hours to a whole day, and I call that the steady. And then the fourth day is what I call down hard, and that's when they take it down hard, and that's indeed the pattern that happened last Wednesday and Thursday.
Does it usually happen around news events like unemployment reports and things of that nature, or is it not? Does it just happen randomly?
I find that if the pattern is setting up and I see it coming, and if it's heading into a Friday jobs report day, look out.
You'll know that the gold will be hit hard on
Yeah.
that Friday as a consequence of the jobs report.
But when they took it down $40, that was following a 2% day, a 1% day, trading steady like calm waters, just eerie calm for about 2 to 3 hours. And I think that was the signal to get out.
Yeah. Do you follow volatilities in gold like you do in the other markets, or?
I don't follow volatility. I follow leverages in derivatives.
Yeah. Okay.
And I think that that's important.
Yeah.
And that's the one I'm working on.
You know, in the conference yesterday, Jim Sinclair gave a wonderful presentation, and he was talking about 1764 on the gold price. Once that level was taken out, you had the potential to go exponential. Are you basically saying that once we go 3% rise in one day for gold compared to the day before, that's similar type of thinking in terms of gold potentially going exponential?
Yes, I do. And I think that 3% or more, or something so unusual that it hasn't happened for a decade, if the next day is not the typical cartel reaction, but if the next day is equally bullish, that to me is one of my clearest signals, like Jim Sinclair's 1764, that we're going much higher.
Yeah, and it's also an indication that the gold cartel will finally be broken apart. The market will overwhelm government intervention at that moment in time.
And it may not be as much that they are breaking apart, but they are going to have to manage retreats to much higher levels much more quickly.
But you can't manage retreat when gold goes exponential, can you? Then it becomes a complete rout.
Fair point.
Yeah.
Fair point.
And I guess the complete rout would be everybody exiting paper currency and avoiding these sovereign debt downgrades by going into the safe haven of a tangible asset like gold and silver.
Yeah. And that is a fair point. And I do think exponential does mean that there is no control.
Yeah. Well, we're looking forward to that day, and also looking forward to the day that gold market is once again free. I appreciate you taking the time out to meet with me today. I always read your little articles in La Metropole Cafe, and I look forward to more of those in the future, and I'll wait for that 3% day.
All right, we all will, and it's a pleasure and honor to be here.
Thank you very much, James. James McShirley. Thank you.
Thanks.